Started. Hey, you guys, welcome to this week's segment on mortgage updates. And we have Eric Sykes here with Primis Bank. Hey, Eric, how are you doing?
I'm good. How are you?
Doing well. So today, I love this topic. You're going to be creating a win-win, scenario between a buyer and a seller, and going over just an amazing concept that I think is really out of the box, innovative, and truly a win-win. So let's go ahead. If you could just dive in and just give us a little bit of background on you and your company, that would be awesome. And then we go ahead and dive into this win-win scenario.
All right, sounds good. My name is Eric Sykes. I'm with Primis Mortgage here in Wilmington. I'm based out of Leland. I work hand in hand with the Cheek team here for all of your needs. But other than that, I'd like to get started and just go over a quick win-win scenario for a buyer and seller. I'm going to share my screen. Can you see that?
Yeah, we can definitely see that.
Okay, awesome. So this is how to create a win-win scenario for a buyer and seller. In this market, with the interest rates going, up every so often, with the inflation that is going on, and possibly next week, there's a lot of prediction on the Fed's raising the interest rates again. So for the buyer and the seller, instead of the seller reducing a $600,000 home to 575, a $25,000 reduction, you could possibly have a buyer do a full price offer, and the seller can contribute $14,400 to the buyer to help them buy down the interest rate, which then they would actually net more by giving them the buy down than they would by reducing their sales price 25,000 and not giving the buyer any seller credit on that end. So it's definitely a good thing to look at when you're out showing homes, talking to sellers, educate them. And Katherine, I'll send you this so you can actually put it in front of the seller, because a lot of sellers don't really understand it, and they think they're losing money when they're actually not really losing any money at all. They're actually gaining money.
That's awesome. Yeah, no, that would be great if you could share that. And we'll post this down in the comments when this video is uploaded, and that way people can take a look at the image as well and download it and save it for themselves. So feel free to do that, everybody.
But other than that, that's all I have for today for the mortgage update.
All right. Well, that sounds. Yeah. So, just if you could just real quick, just go over like what the list price is at 600,000, and then if the.
So for a full price offer, so here's the math. So for a full price offer at $600,000, the buyer's loan amount's going to be 480. Rate, this is all prediction, 5.75. They would be bringing to closing, 135,513, with their principal and interest, taxes and insurance. They're looking at a 4381 payment, and that's going to depend on what area you are in. So the seller will actually make, $551,850, which was the market that we were seeing prior to what has happened with the interest rates. So in some areas you see price drops. So, at a $25,000 price reduction, so they reduce it to 575. So now the buyer, comes in and their loan amount is 460,000 at a 5.75. They'll bring, about 5,000 less to closing. Still no seller credit. Their monthly payment drops around $100, so 4213. and the seller will net, 528,799. So that's a big difference from the 600,000 full price offer to a 25,000 price reduction. But then if you look at it, the seller buy down, you get a full price offer at 600,000. So 480 is the loan amount. The buyer is actually able to drop the interest rate to a 5%.
Almost about a whole percent.
Yeah, which it could be more. I mean, it just depends. This is all speculation and just numbers that I kind of just worked up.
Yeah.
So I mean, their total to bring to close would be 135, 365 this time. Get seller given $14,400, which now makes their payment $4,157. So it drops quite a bit. And then the seller will actually net $537,450 instead of the drop where they reduced their $25,000 price reduction. So it's a win-win for both of them. And plus the buyer, they're saving $56 a month on their payment. And
awesome.
that adds up to $58,762 in interest over the life of the loan because of the lower interest rate.
And the sellers are able to get almost $10,000 more than if they were to do the price reduction. So that is definitely a win-win right there.
Correct. So so now the seller still gets their full asking price, and they'll net $8,651 more dollars than if they were to lower their price by 25,000. So I mean to me it's a no-brainer, but a lot of people they don't really understand it. So seeing it on paper, I think they'll be able to understand more, and you may see a little bit of this in the near future.
Definitely. Well, we'll definitely be taking advantage of this option and informing our sellers and our home buyers about this option as well. Well, thank you, Eric. I really appreciate you hopping on with me to go over this amazing win-win scenario. And it's definitely in alignment with how the Cheek team operates. And I know how you operate with just always creating what's best for all parties and involved in a transaction, because that's what makes a smooth transaction and representing our clients to the fullest. And so if you have any questions about the mortgage rates, pre-approvals or anything like that, give our buddy Eric Sykes a call or text, and he can definitely help you out.
Yeah, my phone number is 910-622-8297.
Perfect. All right, you guys, y'all have a great